Crypto Hotep here with another investing video. We are on week 99 of the Family Portfolio and Dividends Tracker. I really appreciate you guys tuning in, as always, here for another week, another edition, and we're almost getting close to the big 100th episode of these trackers. Thank you guys for the support. As always, thank you for subscribing to the channel. If you haven't, please do so. Thank you for commenting on these videos. Thank you for liking the videos. And if it's your first time watching it, these weekly videos are basically they're trackers for our family portfolio, family stock portfolio that we have. Basically, I gave my family a short list of stocks to choose from. They chose the stocks that they most resonated with, and then we proceeded to use M1 Finance as our broker of choice. You'll see that shortly. And then every week we go through this portfolio, we go through news events, the week, how we're feeling about the markets, any buys, sells, any deposits, and we just go through hopefully building generational wealth for my family. These videos are for my own edification first and foremost, and for my own family's edification as well. And hopefully they can find these videos when I'm dead and gone. Hopefully it'll be beneficial for them and they can carry on just the importance of investing. All right. But if these videos are helpful for you, spread the word. Retweet the videos, share them, do whatever you can to get the word out so the algorithm can keep algorithming and sharing it with like-minded individuals like yourself. But by no means is this financial advice, guys. So that being said, let's go to the news events for this week being February 28th through March 5th. So some of the key items that I did notice: crypto did rebound. So I know we're talking about stocks, but crypto is in that quote-unquote financial market. So crypto did rebound, sitting in between 65,000 and 72,000 range. Why is that big? Well, because it shows that there's more appetite for risk-on assets. Now, when we see that pump in Bitcoin, usually the other equities usually get a good pump too. Now, one of the biggest things that happened was the whole Iran and U.S. conflict that is going on. So U.S. and Israel teamed up, and basically they've attacked Iran, and that conflict's going back and forth currently. So usually when that happens, gold gains, which it has. So but oil has gained because oil is big over there overseas. So that is big right now. Gold is looked at as a safe haven, but I feel as though gold is somewhat taking a back seat to Bitcoin in this side. So this side of the events that's going on, normally when we see things of catastrophic magnitude, such as the potential for a world war like this, you'll see gold, you'll see those metals kind of spike up here. Gold it's kind of in a range right now. Bitcoin saw probably the biggest spike here. Treasury yields are mixed and nothing too much other than that. Nvidia earnings. So Nvidia did blast out their earnings last week. Again, record Q4 revenue, strong guidance, beat expectations, but Nvidia's earnings still fell 4 to 5%. Okay. AI disruption and sector rotation concerns. So again, we've seen this a couple weeks now, where most of those speculative stocks and AI stocks and tech stocks are getting rotated out of, and money is being put into more traditional stocks, or I call them foundational stocks of companies that have been around for decades that do very boring work, right? So when you talk about those type of companies, those companies are seeing the uptick. Companies like a Costco, okay? So, the companies like Walmart, for instance. So those companies are seeing that, okay? Geopolitical, Middle East tensions, we spoke on that. President Trump also did confirm Kevin Warsh as the incoming Fed to replace Jerome Powell. Okay. The U.S. crypto bill stalled somewhat. The banks are kind of rejecting the whole stablecoin and yields. President Trump is kind of trying to push that forward with his rhetoric about, about U.S. being the center of all crypto, and he's really trying to push that narrative. Let's look at labor market. So initial jobless claims did come out. They did come out low, so that's what you would like to see. Private payrolls for ADP came in soft, plus 122 versus higher expectations, but this also sets the stage for tomorrow, which is non-farm payroll. So there's going to be some fireworks tomorrow morning. Anticipated range is 60 to 30K, but there's a potential for a slowdown. And the reason why there's a potential for a slowdown with those non-farm payrolls is because of AI. There's been a lot of layoffs because of AI. There's been a lot of hiring freezes because of AI, and that's just been the narrative so far. Okay, so again, just keep in mind this tomorrow. Tomorrow could be very electric for tomorrow. As we look into week 99, we do look back at week 98. Week 98 saw us with a balance in the family stock portfolio of 4,100 or over 4,100, I should say, so $4,108.72. Money weighted rate of return year to date of 2.89%. Dividends are $6.30, and market gain of $106.37. Now, for this week, week 99, how are we looking? So week 99, we actually saw a dip, a lot of volatility in those markets, and we talk about Middle East, Iran, U.S., Israel, a lot of tensions and a lot of things that the market doesn't like because of the uncertainty. That did bring our family stock portfolio down, and it also isn't a contribution week either. So our balance sits at $4,049.59. Money weighted rate of return of 1.38%. Dividends earned of $8.87. So we got some money there. We'll check it out. And then market gain of $44.85. So let's go to the activity. What went on between this week and last week? So last week we did get Starbucks, a dividend from Starbucks, $1.16, and then dividend from Target at $1.23, and then also a dividend from Visa at 23 cents. With those dividends, we made two buys here. We made a buy back into Starbucks, okay, and then we also made one buy into Target as well. Okay, the 23 cents is a little bit small for the buy, so that's why it's just sitting in cash right now in that portfolio. Now, if this is your first time watching a video and you're scoffing at these numbers about $1 here, $1 there, hey, we've come a long way. That's what I'll tell you. We've come a very long way. We'll go to, let's kind of filter this out so I can show you what I mean. Okay, so we filter it out by the ticker. Let's go to Starbucks. And then the activity type, we're just going to filter it out by dividends. Okay, so if we look at this, right, this is when you are a dividend investor. This is where the snowball effect comes into play, where the motto of, hey, it's not a sprint, it's a marathon comes into play. We started investing into Starbucks February 23 or 23rd, goodness, I can't talk today. February 23rd, 2024, so 2 years ago, okay, we started investing. Or 2 years ago, we got our first dividend, and that was about 10 cents, okay? And look what happened ever since then. Besides May 31st, we've seen an increase steadily in our dividend, up and up and up and up. Then this increase right here gives me more motivation, more gumption to actually stick with Starbucks, stick with investing because of what I'm seeing right here. It's not necessarily about the number, it's more about the habit of consistently getting those dividend payments, and also increasing my position in Starbucks so we can get increased dividend payments as well. Okay? Now, I always like to bring that note about. So, and then also, if you look at the year-to-date number looks small because, again, we're only in March. But if you look back and, I always say scale out, right? Or zoom out, I should say. So if we zoomed out to a year, Look at this, up and to the right for 1 year. We started this time last year, we had a bounce of $1,951.30. Fast forward, we're up over $4,000, and look at that gain, over 17% 1 year return of the family portfolio. So let's just keep that. You got to keep those numbers in mind, especially when the market's dipping like this and everything's kind of bleeding out. You got to look back and see how far you've come. Let's go bottom of the top. Let's go to our middle. Our middle has a balance of $574.74, money weighted rate of return of 5.18% year to date, market gain $25.61, dividends earned of $1.75. So Target has been the turnaround story. And this is what I said in December. I said, watch out for Target. Look at Target's year to date return on our middles portfolio, over 24% on Target. 24% on Target. You love to see it. Costco up over 14%, and the Starbucks up over 18%. That is amazing. And this is so amazing here that this portfolio is still up over 5%, even though we are red in 4 out of the 7 positions. Why? Because we have gained so much in these very established and well-known companies. And as I mentioned, Amazon, Google, Tesla, Sony, all these tech stocks, unfortunately, they are bleeding out. Sony really down over 15%, Tesla down over 9.5%, Google down over 3.5%, and then Amazon down over 4.25%. Okay, but would I change anything? Definitely not. We're going to keep doing what we normally do. Let's go to our youngest. Our youngest portfolio, unfortunately, is in the red year to date, 0.01% money weighted rate of return, a balance of $577.63. Market gain of a negative $1.13, dividends earned of $1.06. So very similar, because our youngest and our middle hold Starbucks and Costco. Those are the breadwinners right now. Apple, even though Apple did unveil a lot of good things in their annual Apple event this week, they unveiled a new iPad, they unveiled the new MacBook, they unveiled an economic version of the iPhone, and I think one of the best things that they actually did unveil is a budget-friendly MacBook that costs in between $500 and $600. I think that's huge, and I think Apple's really going to start eating Windows laptops lunch with that decreased price in that MacBook. So I think they've opened up a new revenue stream for them. Tesla down over almost 10%, and then Sony again down over 15%. Not really doing anything with those. Let's go to my wife's stock. My wife's stock down over 2.5% at negative 2.67%. Money at money weighted rate of return year to date. Balance of $583.37, market gain of a negative $15.68, and then dividends earned of 17 cents. Google, unfortunately, is down, and then Microsoft hasn't caught up yet, so we're down double digits on Microsoft. Tesla, same old story here. And Celsius, unfortunately, Celsius down over 4.25. Pepsi is up 12%, though. Again, you're seeing these like long-standing names that have been around. Some have been around over almost a century. They're gaining. Then they have double-digit gains. Like Pepsi with a double-digit gain year to date, that's tremendous. But you wouldn't expect that. But that's where the market is now. They're turning more into risk-off stocks, right? So stocks that aren't in the tech space, stocks that have a well-known name, that have a moat, if you will, and they're at the top of their class. So our oldest still has a balance above 1,000 at $1,142.49. Money weighted rate of return of 1.88%. Market gain of $18.48, and then dividends earned of $2.33. Apple, we're down, but Costco and McDonald's, we are in the green. And then Tesla, we are down over 9%. Again, when you're in the stock market and it fluctuates like this, you have to have a strong stomach for that, and you have to understand and believe in what you actually put your hard-earned money in and what you invested into. If you're just investing into things because you saw it on Twitter or I told you, or you just see my family invested and you want to do it and you've done no research on your own, then you deserve to lose your money. And I'm just being real with you, because you're not putting in the efforts yourself. You have to, when it comes to investing and trading, you have to at least know what you're doing. If you don't want to do that, then there's also ETFs that make investing really easy. In fact, most of our net worth, other than crypto, is also in ETFs because it provides an easy way to get wealthy and to generate wealth as well. We don't delve into a lot of single stocks other than our family stock portfolio and then some positions that I have that I position trade. But for the most part, you're looking at index funds and ETFs just because it's very easy. It's cruise control. But I do like delving in, looking at financial statements, researching companies and that type of thing, and that's why we do this as well. So with my stocks, I have a balance of $1,171.36, money rate of return of 1.87%, market gain of $17.57, dividends earned of $3.56. Again, per usual, tech is bleeding out, down over 8.25%. Finance, same thing, down over 8%. But again, everything else, we're in the green substantially. So we'll go through this one more time here with mine, even though you may be familiar with the names if you follow these videos. Waste Management and Cintas, again, two well-known and household names for industrials and energy, and they're in the green, up over 10%. Real estate, which we only have one position, and that's O Realty Income, that's up over 15%. Doing numbers, okay? Let's look at consumer staples and shopping. We have Costco and Lowe's. We just talked about Costco, up over 14% for me on Costco, and the Lowe's up over 5% on Lowe's. Again, these are very boring companies that you wouldn't even think of, right? That nobody even thinks of. Pharmaceutical is finally up. AbbVie is finally in the green here for pharmaceutical, up over 2% or 2.5% on pharmaceutical. And then last but not least, we have restaurants and food. We have the GOAT, Coca-Cola, up over 10% on Coca-Cola, following suit with Pepsi, right? And then Domino's Pizza. Domino's Pizza is the only one down here in the red on Domino's, unfortunately, at a negative 3%. But we're closing the gap on Domino's because Domino's, we were down almost double digits on Domino's as well. My portfolio, I love my portfolio, honestly, because it's very simple. And again, everything that I invest in here in my portfolio, I understand. And I know how they make money, and I understand their competitive advantage and how they sit in their market, okay? And I wouldn't change a thing. So with that being said, guys, for week 99, family portfolio, we end at $4,049.59. Money weighted rate of return of 1.38% year to date. Market gain of $44.85. Dividends earned of $8.87. If this video is helpful for you guys in your investment journey, feel free to like, subscribe, comment, share the video. Let me know what you think. Let me know if I should add anything to these videos. Let me know what you're investing in. And as always, guys, thank you and happy investing.